Hey guys, good to have you here. I want to go over a sector and I want to show you how I do it. And the process is more important than the symbols, right? We're taught symbols are important, but really we have to understand how to find those symbols. And then once you find them, it's not really the important part. It's how to actually manage your own feelings while you're in them. So what I want to do is I want to go back year to date, and I'm inside stock charts right now. And what I want to do is I just want to tell you how and show you how I got here. So let's jump into that now, and we're going to have some fun. So guys, I want to look at energy. Now, energy is not a arbitrary looking, suspecting, understanding sector. Like, I want to look at it because it's the leading sector in 2021. And we're not quite through half the year. But one thing I do understand is most people do not understand momentum and how momentum is really the name of the game. And everyone that got into value investing over the last decade, over the last 2 decades, over the last 3 decades, 4 decades, 5 decades, you get the point, have underperformed. Because all that really matters is 3 things: price direction, strength, and signals. That's it, 3 things. So I want to show you how we look for some of those. So I picked energy because if you look on here, actually, when I say look on the screen, I'm not sharing my screen here, so let me share my screen here. Energy is the lead sector of the year. Now, there's only 11 actual sectors of the U.S. stock market. Energy is one of them. It's on the top. Right underneath that is regional banks, which is a subsector of financials. Financials is number 3. You can see number 4 is dividends. Now, dividends is not officially a sector. There's only 11 sectors, but dividend is a way of slicing or segmenting the market. Underneath that is commodities. DBC is a commodity ETF. It's kind of the S&P 500 of the commodities. And then we have transportations, we have micro cap, we have materials, and I'm not going to keep going. But so that's where we have all these. Now, what I've done is I've dropped in all the symbols. I found a bunch of symbols. I went into XLE. I went over to ETF database, etfdb.com. And I put in all the symbols that were in XLE, the ETF. I also threw in a bunch of smaller energy symbols. So I looked at a couple different ETFs. And so within this, actually, I'll just show you. Within here, I just then, I already had this in here. But within here, I have, let's see how many are in here. 85. I have 85 symbols. There's a couple duplicates in here, but I dumped in 85. Let's call them 80 symbols. Now I could do this, just go through here and look at this, or I could come over here and look at the energy sector and just go symbol by symbol. Now this is going to be in alphabetical order. So what I'd actually prefer to do, let me do this. What I actually prefer to do is just come over here and let's just look at some of the symbols. So the first one at the top of the list is something called SM Energy. So right away, I just want to go look at SM Energy. I don't know anything about it, but let's just look at it here. $2 billion market cap. All right, so small, which means it can really move. From the COVID bottom, it didn't, look at that double bottom at the COVID bottom, double bottom, that's strength. And from there, it's up 16 times, 16x. So that's pretty good. Now, no wonder why SM is going sideways, right? It's up 16x. Now, here's the crazy thing. When a symbol moves 5, 10, 20 times in 1 year, which is what SM Energy has done, it's very common that symbol falls 40 to 50%. So far, energy and SM, this is a small cap energy. It's exploration and production. We'll just call it exploration. It's corrected through time. That's what you see on the screen here. It's going sideways here. It really hasn't done anything. Now it hit this resistance here, right? So one of the things I train my clients to do is to use their eyes to see what's going on. That's price. That's one of the 3 things I talked to you about. You have to understand price direction and how to read a price chart properly. So it is within kind of this backwards, this, when I said backwards, I was looking over here, backdated. it's up here in kind of this mess right now. But notice that it's up above and in kind of this system right here. It's already in it. And it really, to me, looks like this is just coiling and it wants to move up to this high in 2018. I doubt that's its high right there. I'm going to zoom out, but let's just look here. Let's just go back. I just want to zoom out. Let's just see what this thing looks like when we zoom out. So when this thing zooms out, when this price chart zooms out, we can probably see, and I'm going to zoom out again, its lifetime high looks like it's about 400% up there. So if energy keeps moving, and we're going to back out in a moment. I'm just going to look at energy, the sector. But if energy keeps moving, this looks like it's got a 400% upside. Now, there's going to be some places of resistance and some places of maybe some sidewaysness. But I don't think it's going to be anything like this because, again, this did a huge fall. I mean, from 2018, what's that, October 2018 to April, this fall of this symbol, that's pretty amazing, 98% between these two blue lines right there, 98%. Now, the one resistance I see, again, this is a super strong looking, I just want to see what we got here because this was kind of the first thing I saw when I zoomed out. I like to keep the mountain peaks above, right? Like it tried to get above the resistance, but it couldn't. And so I just kind of want to see from a downward trending position what's going on. So the fact that SM Energy is consolidating above down this huge downward trend, and that's 1, 2, 3, 4, 5, 6, 7. That's 7 years being in a downward trend. The fact that it's consolidating above that downward trend, that's a pretty big deal right there. And you can see there's clearly a lot of volatility in here. Had it in 2016 here, came back into this range, had this huge clean out here. Right here, that's 2020. That's the COVID crash right there. But it got back up, denied it. It was denied. Look at that. Sellers came in. Supply came back and people said, no, I want to get out of my SM Energy shares. Came back down. Didn't get as low as this. That's actually called a 1, 2, 3 bottom. It's incredibly stretched. But the fact that this is consolidating above a 7-year downward trend makes this even more interesting. So that was the first symbol I saw. And I just went over here to energy. I put in, like I said, I had downloaded about 80 symbols, large cap, mid cap, small cap. Clearly SM was put in here twice. But here's the second one right here. But let me do this. Let's just go back to energy itself. And let's just look at energy because what happens to energy is going to impact everything within that sector. And we're super zoomed out right here, guys. This is 10.5 years. I mean, this is a pretty ugly looking price chart, but let's go with it here. Let's just see what's going on here because it's kind of messy, but I want to show you a couple things that I'm noticing here. And so one of the things I'm noticing is just this kind of this resistance zone right here. Just look at that, right? So here's what's important. You have to understand where supply is and where demand is. Where's the supply and where's the demand, right? You can call it supply, demand. You can call it buyers and sellers. The terms do not matter, but the attention to where they are hanging out and hiding does matter. So that's pretty interesting, and it's above that no go zone, which let's call it kind of $43 to $47. That was a huge support resistance for energy, right? You can see here. The buyers came in, 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 then boom, sellers, and then buyers again. And it's above that. So that's a significant point for the energy sector. And when I say energy, I'm not actually talking the underlying commodity. Okay, I'm talking the equity energy sector stocks. So that is looking pretty good. Now there is a lot, this is all this up here, guys. This is all called overhead supply. Right, so there's definitely a lot that this has to move through. The thing is, it's moving through it, right? That's the thing. Now, it's going to be bumpier because there is some overhead supply. And all these major peaks here, major peak, major peak, major peak. But you can see it broke that downward trend also, and it broke above that peak. So energy is really repairing itself and really moving higher. And it's not like it's gonna move higher or it should move higher or it should move higher soon. It is actually moving higher. And this is the market we're in 2021. We're almost done with the first 5 months of the year, and the energy sector is up 40%, and it's continuing to strengthen. It would not surprise me if energy ended higher, 100%, close to 100%, if it made it right back to its old lifetime high. Call it about $78. And it looks like energy started this year right around, I'm going to give a really general number, about $40. So it's figuring it out. It's moving higher. Actually, it might have been $38. So the other way of looking at energy, I wanted to show this kind of support resistance is, there's a lot it has to move through. And once it kind of moves through its main, I call these weather systems, right? There's turbulence. It's going to get up here where there's less turbulence, but it is doing its job. It's moving through. And so that is, it's not like, that's why I like energy. I like energy because it's the strongest sector this year. It's actually one of the strongest sectors, segments, or slices. On my previous chart, the one I started with at the beginning, I showed you there were about 40 different sectors, segments, and slices of the market in there. Transports were in there, regional banks, you saw that, dividends. So there are a lot of different things in there, not just those 11 sectors. And it's beating all of them. So if you want to go fishing, you might as well go fishing for the strongest. You want to find the strength, which is one of my 3 things I teach people in my training. You got to understand price charts, understand the direction. You have to find the strength, and you have to look for the signals. So let me do this. Let me zoom in here. And then if we have time, I'll go back and look at a couple more symbols in that list here. So here's energy itself. This is just a 3.5-year price chart here. I just zoomed in. You can see the kind of this, what I call weather system right here that it's moved into, and that through the weather system, a lot of support resistance here, supply and demand. And again, it's moving itself through it. I just want to quickly see how it's doing relative to the overall market. So let's do that. Let's start counting. Okay. So here's energy priced in S&P 500 units. The first thing, there's a lot of interesting things going on here, but let's just see how this guy's doing with this downward trend. So we're looking at the energy sector, literally priced in S&P 500 units. And this is probably what it was. And so again, it's broken out of that 3-year downtrend. It's sitting on top of it. Clearly has some work to do because there's these 2 tops here. Now remember, this is not priced in US dollars. This is priced in S&P 500 units. So it's working itself through this, what is right now a double top. And it's working through that right now. Now you could lower this and kind of say it's this, but this kind of feels and looks like the main resistance it's working through right now. So what's nice about understanding how to find strength and relative strength and absolute strength and put them together in a simple approach, whether you're an investor or a trader, is you start to see things that other people don't see. And then you start looking for the signal. So energy is doing well. It is outperforming the S&P 500 since November of last year, and it's working itself through. Nothing crazy, just working itself through. Okay, let's take one more, CPE. Let's just go look at what CPE is. That was another one. CPE is very similar to SM Energy. It's close to the same size. SM was 2 billion. This is 1.75. Let's just call that 1.75 billion market cap. It's the same. These 2 look very similar. Don't buy both, guys. They look the same. Let me just start to see here, just based on, let me just see. Marathon Oil is one of the larger ones. So let's just see, how big is Marathon? And I'll pull up the big boys or the big girls in a second. Yeah, it's not that much bigger. It's 9 billion. It is 4x bigger than the other 2, but you see a very similar behavior with Marathon. Then we'll get to the big ones. Let me just see if we see any other. No, just looking quickly. All right, I'll just pull up Exxon here. Let's see how Exxon's doing here. Exxon, $250 billion company. We were looking at a $2 billion and a $9 billion, or $2 billion market cap. So now here's Exxon, and Exxon's about $250 billion. So pretty big company. And you can see here again the same kind of overhead supply. Technical analysts call that overhead supply. So people are going to remember that they bought Exxon at $73, and they're going to supply the market with shares when it hits 73. How long it stays there? Does it bounce off? Does it break through? That's part of understanding the signals and reading strength, not just absolute strength, but also relative strength. So Exxon's making its way up. I mean, I have to say to you, this is a much safer stock to own with a 5.85% dividend than when it was down here. Everything was breaking up and out, and Exxon was breaking down. It was actually a much more dangerous stock. Its dividend is about $3.50. So clearly, if the price down here, let's say, was $35, and you bought it down here, I get it. That would have been a 10% dividend because your buy price was $35 and the dividend is $3.50. But still, up here at almost 60, it's a pretty solid dividend considering the S&P. Let's just see what the SPY. That dividend is 1.33. So it's pretty good. It's 4 times bigger than the S&P. So energy has woken up. There's definitely going to be some overhead supply. There's going to be some bumpiness, but it's moving higher. You can see here, that is a new high. Now this is Exxon, but Exxon and energy are probably almost the same looking. Energy sector right here hit a new high for the year, just pulling back a little bit, but just notice that there's buyers coming in. That's what you want to get. You want to find things. Let me go over to what you're doing is the game is to find symbols that when they go higher, more people want to buy them. I mean, think about that, right? The price is going higher, and that's increasing the demand for the symbols. And notice I just keep saying symbol. I'm not saying stock or bond or commodity or equity or fixed. Like, think of the more and more you think of these as symbols. Now there's different type of symbols. The better you're going to be as an investor and a trader. But whether you're going to be an investor or a trader, it comes down to understanding price direction, understanding where to find the strength, and what those signals are. And once you have those all sit in the container called your emotions, your feelings, your behavior, psychology. It all comes down to that. All investing is behavioral investing, just like all health is mental health. It's kind of interesting. Health, we use the word mental, but we don't say that with investing, right? We don't say mental wealth. We don't say behavioral health, but it's the same thing. All health is behavioral or mental. All investing or all finance or all health is behavioral or mental. And that's why really understanding how you behave when you're in it is so important. And this is why books actually can't help that much, because you can read whatever you want, but the moment you're in something and it's going sideways or it's correcting, you have to understand actually how to behave. So thanks guys for being here. I appreciate you. If you like this, please hit the like button, leave a comment. Tell me where I'm wrong. Tell me what I'm missing. Tell me what you're looking at. Where are you looking? Is there a better sector, slice, or segment that you're looking at that you think I should be looking at? Just go ahead and put it into the comments and I'll check it out. And if you like this video and the videos that I produce, then you're going to love my free course called Clarity and Control. And in the 2 decades that I've been working with people, those are the 2 things I hear over and over. How do I get control back? How do I get control back over my future, over my money, over my investing, over my portfolio? It's about getting that control back, right? And the other is the clarity. How do I filter out all the noise so I have the clarity I actually want? Because there's areas of your life where you have the clarity, right? Maybe it's with your career, maybe it's with your marriage, maybe it's with your health, but you don't have it with your finances or your investing. And so Clarity and Control is this free course that I put together that shows you how to start to take it back. Thanks, guys. I appreciate you being in my world. This is RC Pack, and I'll see you on the next video. Okay, bye.